Hello and welcome to Omniscience Capital Scientific Investor Series. Today we are discussing an interesting topic about the portfolio performance. So many times you started investing in equities, you had a good run and market was booming, and then suddenly a stagnation phase comes in where for maybe quarters to years you see that your portfolio is not moving. And especially when even if the index or the broader market is moving, you realize that returns from your portfolio are not encouraging, right? So what could be the reasons, right? One specific reason that we have seen, and we have reviewed thousands of clients' portfolios, direct equity portfolios, and what are the mistakes they typically end up making. One typical issue that we have seen is over diversification. So while diversification is an important tool, to manage risk, expand opportunities in your portfolio, cover, large set of sectors, industries, or themes, but if you don't do it in a informed way, like where you know that why you are buying these stocks, what you are buying, and you keep accumulating stocks based on, tips you get from different platforms, what you hear in media, what you read on newspaper, and so on, then you just keep piling on, stocks after stock in your portfolio. And while, if it is a bull phase for the equity markets, because the market is going up, most of the stocks that you end up buying also in a temporary phase keep going up, and you are satisfied your performance. But when the stagnation hits and the broad-based market stagnates or consolidates, and in that next phase you will realize that your portfolio is not moving, right? So over diversification and buying stocks without really understanding why you are buying, because the only parameter you are looking at that the stock price should go up, right? And if that is the thing, then you feel very disheartened, right? When over a 2-year period nothing has happened while market still has moved up, right? Because in market what is happening, there is continuously smart investors, scientific investors, or informed investors are taking a view of the market across sectors and across stocks, across capitalization. And wherever they are finding mispricing, opportunity for growth, they are moving their portfolio and allocating to that segment. And that's where the overall market, while certain sectors remain depressed, you will see the broader market can continue to go up, right? So that is the, really the skill, and that is the kind of activity that even at a diversified portfolio level is something all investors have to do, whether irrespective of what your capital size is or whatever your portfolio size is in terms of number of stocks, right? So you need to have conviction in terms of why you are buying that stock, which particular theme you are taking exposure to, which particular sector, industry, and why you're doing it. Like, do you see high growth opportunity? Do you see mispricing in that particular stock or that particular theme? And when you know, then even if this you don't see price performance commensurating with your expectation or tying up with what should have been, you can still continue to hold because you are convinced and you have a conviction in terms of that particular theme, right? So don't just keep on piling on stocks. Don't just try to build a stock where you have companies from all sectors, right? Because if I want to build a portfolio that I have exposure to this sector, that sector, then why don't you just go and buy Nifty or just buy the full market, right? Through an index fund and so on, right? That's a much better approach than trying to do direct stock picking, trying to do direct stock portfolio and not having any plan about it, right? So that is the first point. Now, when you go and try to build a portfolio, which is where you are trying to deviate from the benchmark index, right? So I don't want to buy all Nifty 500 stock or not all Nifty 100 large cap stocks, but I want to do better. There, what is the diversification you are building in? One, that it needs to be sufficiently diversified, but you cannot buy stocks in quantities which either if they do well are not going to make an impact on the portfolio, or if they do bad, which is your worry that you don't want to put too much into particular stock, and so it shouldn't impact your portfolio performance. So either way, it is not helping, in terms of your approach. So it's very important that you maintain basic level of diversification, but still have conviction in the stocks or the picks or the sector exposure that you're going after. And then you have to continuously maintain and review those sector allocations in terms of, are they continue to remain high growth opportunities? Do they continue to remain mispriced vis-a-vis the the yields, the growths, and the kind of opportunity for these sectors? And if yes, then you continue hold them, right? So this is a approach in terms of portfolio diversification, yet maintaining a level of conviction and level of concentration that helps you maintain a outperforming portfolio vis-a-vis the market portfolio.